Hi, this is Jeff Higley with Hotel News Now. I'm sitting with Larry Wright from Wright Investment Properties in Memphis, Tennessee. Larry, thank you for being with us today. We appreciate it.
Well, we typically keep somewhere around 20 hotels in our portfolio. We celebrated our 25th anniversary last year, which was kind of a lot of fun. And so we've seen a lot of ups and downs, and we try to maintain a very conservative posture. We don't do a lot of deals. We're very cautious from a due diligence standpoint. We typically, historically, have always done value-added deals. We always look for significant upside. We also historically have always looked at keeping hotels that we purchase for a number of years, and really recently we have been our hold period has only been, say, 3 to 5 years, and then typically sell to an institution or someone like that. As far as the type of hotels that we pursue, again, we look for value-added deals. We look for significant upsides to provide the kind of returns to our partners that we have historically always enjoyed. There's a real value for entrepreneurial-driven companies and downsides. The downside that we're seeing right now provides opportunities for companies like us. We always, riding that cycle in hotel business, you have a deeper cycles than you do in apartments, offices, condos, hotels. Any other facet of real estate, the cycles are deeper. The highs are higher and the lows are lower. And if you can, again, entrepreneurially take advantage of that, and we're not smart enough to figure out the low or the absolute high. But we're smart enough that we can figure out, hopefully, riding it down and make some really good acquisitions. And we ain't got to sell on the high. We've just got to sell, fairly close to the high, and that's all we want. Pigs get fat and hogs get slaughtered. So that right now we're starting to hit some lows, and I think in the next 3 to 6 months to 9 months to 12 months that we're going to see hopefully some excellent opportunities, and hopefully we'll be prepared to be able to take advantage of those. Extremely challenging. Unless you have the right sponsor, you have the right property in the right location, with the right track record, and probably with prior relationships, it's going to be tough to get a hotel deal done. There is still a gap. Most of the properties that we're seeing are seeing a fairly significant tracking down of both NOI and RevPAR, more so than the overall national numbers indicate. But the seller's mentality still is still 6 and 12 months ago to some extent. I'm afraid that unless the seller is about to have a refinancing need or really needs some cash to get into something else, it's going to be difficult to buy that property based on the conservative posture that we take when we look at deals. From an acquisition standpoint, in about the last 18 months, we've done about $135 million worth of acquisitions. It really was just 3 hotels: Connecticut, DC, and downtown Nashville. In each case, there is a renovation component. One of the hotels was a full gut, one in DC. Our location is outstanding. We can spend a lot of money on it. We feel like that the return ROI is going to be significant. The other 2 were already branded hotels with good brands, and we're spending anywhere between $2.5 to $4.5 million. The one in Memphis was a Residence Inn that was an apartment building. And first I was looking for an empty building. We couldn't make it work. So then I thought, if I can find an apartment building that has the same floor plan to make it work, because I was really directly headed for a Residence Inn acquisition. And I found one, fortunately. But we had to gut it. We had to gut the entire property. It was very significant. And with an older building, this was a 1930 building, you do run into challenges, sometimes unforeseen, that you're not entirely aware of from a mechanical standpoint. And once you get into some of the renovation, get behind the walls, sometimes you do have some surprises. We've been doing this for over 25 years, so it mitigates the number of mistakes that we've made. It's certainly different than managing for your own account. Deals that we do that we have full ownership in and we fully control. When you're dealing with an institution, whether it's a REIT or a pension fund or a life company or managing for a banking institution, whoever, it makes you better, because they deal with a lot of other hotel management companies, and they bring things to our attention, or their expectation levels are sometimes a little bit higher. You're dealing with some really smart guys, and it makes you better.
Larry Wright from Wright Investment Properties, thank you for taking the time. I really appreciate it.
Thank you, Jeff.